Hello and welcome to another video where we will be solving O-Levels Principle of Accounting exam paper 1, which is about multiple choice questions. This is from May-June 2017, and we will be following paper 1 variant 2. So, it's paper 1 variant 2. Let's get started with the questions. The exam has 30 multiple choice questions, as you may already know. So let's start looking at the questions one by one. So question 1 basically says, what is a disadvantage of information and communications technology in bookkeeping, right? So the key term here is disadvantage, not advantage. So you need to search for what is the disadvantage between A, B, C, and D. So option A says accuracy of calculations, that's an advantage. Option B says capacity of information storage, that's an advantage. Cost of training, right? So this is term that they've used word cost, not cost saving, right? So if they would have used cost saving, then this would have turned into an advantage, but right now this is a disadvantage. They've only used the term called cost of training the staff for using the new system. Then speed of processing the information is also an advantage. Since the question is asking you about a disadvantage, so the answer to multiple choice 1 would be option C. Let's look at multiple choice 2. Multiple choice 2 is a trader made the following entries in his accounting records, right? So debit income statement and credit capital account. What did he record? Capital introduced? No, if there was capital introduced, then the debit would be cash and credit capital account. So not option A. Capital withdrawn? No, that's more like an entry for drawings. Loss for the year? No, it won't be loss for the year. Otherwise, the entries would have been inverse, right? So if it's a loss, then it reduces the capital account. It reduces the capital account, whereas they have credited the capital account. So it's not option A, it's not option B, it's not option C. The answer to multiple choice 2 is actually option B. So profit for the year, right? So this is basically talking about closing entry. You're closing the entry. So you debit the profit to retained earnings. Right? So in retained earnings is basically part of capital account. Therefore, the correct answer to multiple choice 2 is option B. Let's look at multiple choice 3. So multiple choice 3, a customer received a credit note, right? So a customer receives a credit note. That means the customer has to pay less, right? So customers has basically returned the purchased goods. Has returned the purchased goods that he or she purchased, right? So in which book of prime original entry would the customer record this document? And this is asking from customer's perspective, right? So it could also ask from the seller's perspective, right? Seller's perspective. The question could also be from seller's perspective, but the question is not from seller's perspective, it's from customer's perspective. So where the customer is going to record such a transaction, it is going to be a purchase returns general, right? Because the customer purchased and then later returned, maybe because the goods were faulty, maybe the customer did not wanted those goods and he or she returned the goods, right? So they will be recorded in purchase returns general. So the answer to multiple choice 3 is option B. Let's look at multiple choice 4. Multiple choice 4, total goods returned to Wayne by credit customers in March 2017 had a list price of $440. He allows a trade discount of 25% on all credit sales. He posts the total of his sales return general to the ledger at the end of each month. How much would be debited to Wayne's sales return account on 31st March 2017, right? So that would be actually the net amount, basically. So you can either do 440 times 75%, or you can calculate the discount, which would be 440 times 25%, and this is going to give you $110, right? And then you can reduce the amount, that is 440 minus 110 and 330. This is the amount that would be recorded in Wayne's sales return journal, right? So the answer to multiple choice 4 would be option B. Let's look at multiple choice 5. This one might take some time to read and understand, but doesn't seem that difficult. Let's see. Melissa transferred $5,000 from the bank deposit account to the bank current account, right? So basically debit bank current account, because that's an asset which is going up, and then credit bank deposit account, right? So that's one part of the entry on 1st May. On the same day, she received a bank loan, $10,000, which she paid into the bank current account, right? So again, debit bank current account, and then credit bank loan, because that's a liability. So all you need to do is find this transaction in your options, right? So I can see, option A and option B is absolutely incorrect because Melissa received this, right? So you can come down to 50-50 now and focus on option C and option D, right? So you see bank loan credits here, bank deposit debit, but this is wrong, right? This is wrong because there's a credit on bank deposit account. So option C is also incorrect. So the answer to multiple choice 5 is actually option D, credit bank loan account, credit bank deposit account, and bank current account would be a debit, right? So that would be your answer to multiple choice 5, option D. Let's look at multiple choice 6. So multiple choice 6, on 31st July, the bank column in Jay's cash book showed he had a balance of $312 in the bank, right? So in the books of Jay's, in the book of Jay's cash book, the bank should have a balance of $312. That's what it is saying. On the same date, his bank statement showed a debit balance of $53, right? So bank shows $53, but the bank statement shows $53, but his cash book shows $312. So you see there's a huge discrepancy over here. So later it was found that the bank charges of $47 have not been recorded in the cash book, right? So Jay needs to reduce 312 minus 47, and a check of $318 from a customer had not been credited by the bank, right? So this error is in bank statement, right? So not in the cash statement, but in the bank statement. What is the bank balance that would be shown in Jay's statement of financial position, which is your balance sheet basically, which is the balance sheet of Jay on 31st July, right? So that would simply be 312 minus 47. You will ignore $318 here because this is an error at the bank's part, right? They have not credited the check received from the customer as of now. So 312 minus 47 is actually going to give me $265 as an asset, right? So it would be shown as an asset. So the answer to multiple choice 6 is option A. Let's look at multiple choice 7. Which accounts all have a debit balance, right? So assets and expenses have actually a debit balance. So let's see, capital has a credit balance, insurance, we don't really know what it is, purchases usually have a debit balance, right? So option A is actually incorrect. Drawings, sales, purchase, returns, they don't all have debit balances. Inventory is an asset, that's a debit balance. Motor vehicle is an asset, that's a debit balance. Cash is an asset, and that is a debit balance. So the correct answer to multiple choice 7 is actually option C. Let's look at multiple choice 8. Sukesh account in the books of Jack showed the following, right? So this is Sukesh account in the book of Jack's, right? So look at the balance, right? It's $450 debit. So Sukesh, so you can actually tell from Sukesh is customer of Jack. So, or in other words, Jack sells goods to Sukesh. So which statement about the transaction on 8th May are correct? So you can ignore May 1st, you can ignore May 4th. There are 2 transactions on May 8th, right? So if you look at it, basically what has happened is, Sukesh basically paid, Jack received. That's one part of the transaction. And then here for this transaction, $18, Sukesh received discount, or Jack allowed discount. So you would have to find something along these lines. That would be the transaction which would be correct. So Jack made a payment, that's actually incorrect. Jack received a payment from Sukesh, that's actually correct. Sukesh allowed a discount. So how can Sukesh allow a discount when Sukesh is actually a customer, right? So statement 3 is incorrect. Sukesh received a discount, that's actually correct. So the answer to multiple choice 8 would be option D, 2 and 4, right? So these 2 statements are actually correct. That's what the question is asking. The question is not asking for incorrect statements. If the question was incorrect statement, tell the incorrect statement, then the answer actually would be option A, 1 and 3, but the question is asking what is the correct statement. So you need to focus on what the question is asking. Right, so the answer to multiple choice 8 is going to be option D. Multiple choice 9, which is an error of omission, right? So error of omission basically means that the transaction is not recorded, right? It's very apparent the word no is here. So the answer to multiple choice 9 is actually option A. So no entries have been made for purchases of stationery by the check, right? So the transaction, the financial transaction has been completely omitted from recording in the books. All right, so the answer to multiple choice 9 is going to be option A. Let's look at multiple choice 10. Multiple choice 10, Maria started a business on 1st May 2016. The monthly rates on her business premises are $100. During the year ended 30th April 2017, she paid rates of $1,300. Which journal entry will Maria make on 30th April 2017 to transfer the rates to income statement, right? So this is a whole financial year. If you look at the dates, this is like a whole financial year for 12 months. And the expense should actually be $1,200. And that's what should be recorded in the books, or more specifically in income statement. Right, so $1,200 should be recorded in income statement. So you can ignore the answers with $1,300. The concept here, if you're looking for accounting concept that is being followed, it's called the matching principle, where it says that all the sales revenue included in the current year should be recorded in current year, and all the expenses incurred in the current year should be recorded in the current year, right? So that's what the question is basically is saying, right? So the answer to multiple choice 10 is actually option A, because it's talking about how would you transfer the rates to income statement, right? How would you transfer the rates to income statement? And that would be actually option A, because it's an expense, right? So income statement is reducing $1,200 and then the profit as well at the same time. So the correct answer to multiple choice 10 is actually option A. Multiple choice 11, Liam rents premises from Gavin, right? So Gavin basically, Gavin is the owner, right? So Gavin is receiving the rents. In March, Liam paid the rent in advance for April and May. How would the balance on 1st April in their ledgers appear, right? So Liam pays rent, so you see rent payable. Gavin receives rent, that's rent receivable. So Gavin received rent in advance. For him, it's going to be a credit balance, right? So it's either going to be option A or option C. So you can actually ignore option B and option D. Right, so now you need to choose between A and C. For Liam, since Liam paid rent in advance, it's going to be an asset. It's prepaid rent, right? It's prepaid rent. So prepaid rent or rent paid in advance, this is an asset. This is an asset and would have debit balance, and assets have debit balance. So the answer to multiple choice 11 is actually option C. Let's look at multiple choice 12. Multiple choice 12, an item of capital expenditure has been incorrectly recorded as a revenue expenditure, right? So it should have been capital expenditure, but it is recorded as a revenue expenditure. What is the effect of this error, right? So what is the effect of this error? Your assets are going to be understated, and because you increased your expenses, your profit is going to be understated. Your profit is going to be understated, right? So the correct answer to multiple choice 12 is actually option D. Let's look at multiple choice 13. Which cost would not be depreciated? Which cost would not be depreciated, right? So improvements are actually going to be capitalized and depreciated. Installation are again going to be capitalized and depreciated. Purchase of non-current assets, I mean, of course, that is going to be depreciated. Repair, this is something called revenue expenditure, right? This is something called revenue expenditure. So the correct answer to multiple choice 13 is option D. Now, the one thing that here you can note is that, option multiple choice 12 and multiple choice 13 actually tested the same principle of differentiating between capital and revenue expenditure, right? So you need to understand, it's just that the question was a little different, but it was testing you on the same thing. Differentiate between capital and revenue expenditure. So sometimes you would see a question which would actually be requiring similar knowledge, but just little different. Let's look at multiple choice 14. The following account appeared in a trader's ledger. So this is account for provision of depreciation or accumulated depreciation. And all these balances are actually telling you, so the depreciation expense and depreciation expense in total as well, right? So there were no sales or purchases of machinery during the 2-year period. Okay, that's noted. What does the $5,100 on 1st January 2017 represent? Right. So if you look at the options, it's not going to be C and D because it's not net book value, right? It's not a net book value account. It's simply a provision for depreciation account. So to calculate NBV or net book value, it's always cost minus the accumulated depreciation, right? So it's not showing that. So it's not either C or D. It's going to be A or B. So let's look at what's the difference between A and B. It's the difference between them is that they both are showing accumulated depreciation, but the method is different. So this is diminishing and this is straight line, right? Now, how would you have in this question? How would you determine that whether the company is using, diminishing, reducing balance method or straight line method, right? So you would look at the actual depreciation expense. In 2015, the depreciation expense was $3,000. In 2016, the depreciation expense was $2,100, right? So the depreciation expense is not same, right? If it was a straight line method, the depreciation expense is going to be same. It's going to be same as $3,000, right? So in this case, the correct answer to multiple choice 14 is actually option A. It's following diminishing or reducing balance method, where the depreciation expense is higher during the first time, and then it reduces over time, right? So that's what the diminishing or reducing balance method is. If you want to know more about these two different methods and how the depreciation is calculated, please feel free to watch a video where I have talked about different depreciation methods and how depreciation is recorded in companies' accounts, right? So you can watch that video on my channel. Let's look at multiple choice 15. Multiple choice 15 is about suspense account. As we can see, the totals of a trial balance did not agree and a suspense account was opened, right? It was later found that the total of the discount allowed column in the cash book was $100, had been credited, right? Had been credited to the discount allowed account. Which journal entry would correct this, right? So by mistake, the discount allowed was credited, so it should have been debit, right? So discount allowed should have been debit. Discount allowed should have been debit, right? So it's either going to be option A or option B. It's not going to be option C or option D, because the company has already done this and had made an error, right? It's just that now you need to understand which amount will you take, right? Which amount will you take, whether you will take $100 or $200. So in this case, the answer actually is going to be $200. So therefore, the correct answer to multiple choice 15 is option B. Why $200? You might be wondering why $200. So look at this. The company has actually recorded discount allowed credit, right? So company has actually recorded discount allowed credit for $100. We need to reduce this. We need to correct this. So we will debit discount allowed. We will debit discount allowed by 100. So this has corrected. This has corrected the error, but still the discount allowed is not recorded, right? Discount allowed is still not recorded. So company needs to debit discount allowed for the second time for $100, and therefore this will add up. This will add up to $200, right? So that's basically the rationale. Behind it. So the correct answer to multiple choice 15 is actually option B. Let's look at multiple choice 16. So multiple choice 16, a trader calculated her draft profit for the year at 28,400. She later discovered the following errors. A prepayment of rent payable was understated by $1,000, and closing inventory was understated by $1,500. What is the correct profit? So all you need to do is basically add both the numbers, because the profits have been understated. So 28,400 plus 1,500, which is for closing inventory understated, and then $1,000 for rent prepayment of rent payable that was understated, right? So your total profit will come around 30,900. So correct answer to multiple choice 16 is actually option D. Multiple choice 17, a business has two departments, X and Y. The total revenue was 120,000, of which 60% related to department X. So 40% relates to department Y. So 120,000 times 40%, that's the sales revenue for Y. The total cost of sales was $90,000, of which 50% related to department X, right? So 90,000 times 50%, that's again related to Y. What is the gross profit of department Y, right? So I won't calculate the numbers here. You just need to follow the formula here. Just calculate these Y1 and Y2, and then Y3 is actually going to be your profit. That's going to be your profit. But for the sake of for answers, the answer to this question should be actually 17. So it should be $3,000. Right, so the answer to multiple choice 17 is $3,000. It's just simple math over there that you can do by yourself. Let's look at multiple choice 18. Multiple choice 18 is basically saying Alex purchased goods for resale costing $1,000, to which he should have normally applied a 25% markup. These goods remained unsold at the end at the financial year end as they were found to be damaged. Alex estimated that they could be sold for $600. At which value should these goods be reported in the year end financial statements, right? So it's following the principle, if you remember, lower of cost or net realizable value for inventory. Right? So the cost here in this case is actually $1,000. But they could be only sold for $600, right? And at what amount these inventories or the value of these goods would be shown at the year end of the financial statements, which is basically talking about balance sheet. The inventory, this unsold inventory, would be shown as an asset, but at what value? That's what the question is asking. So the answer to multiple choice 18 is actually going to be $600. Option B. Let's look at multiple choice 19. On 1st April, a business had a working capital of $6,000. On 2nd April, $1,150 was received from credit customer in settlement of debts of $1,200, right? So $50 was received less. On the same day, damaged inventory costing $200 was written off. So again, your working capital is going to go down by $200 and $50 at the same time, right? So the total value would be $250 down, basically. You received, you lost 200, the business lost $250, right? So 6,000 minus 250 will actually give me 5,750. So the answer to multiple choice 19 is going to be option B. Let's look at multiple choice 20. So multiple choice 20 is about Pooja owns a hair salon. She lives in a flat above the salon. The business pays rent for the whole building. No adjustments has been made in the financial statement for the rent for the flat, right? So this is a personal expense. And this should not go on company's income statement. What is the effect of omitting these adjustments? You have actually understated your profit. You have just understated, the company has understated the profit. For capital employed, there's no effect because it does not impact the capital employed. So the answer to multiple choice 20 is actually option C. Let's look at multiple choice 21. Ben and Joe decided to form a partnership. Ben is to invest $50,000 in business and Joe $10,000. Ben wants the partnership agreement to reflect the differences in the amounts invested by the partners, right? So Ben has invested more, Joe has invested less, and Ben wants that this should be reflected appropriately, which is very much a reasonable request, right? What should Ben insist is included in the partnership agreement, right? So it would be interest on capital because Ben is expecting to receive more money than Joe because Ben has simply invested more money. All right, so the answer to multiple choice 21 is going to be option A. So let's look at multiple choice 22. Multiple choice 22, a sports club was formed on 1st January 2016. What amount will appear for subscriptions in income and expenditure account for the year ended 31st December 2016, right? So what amount will appear on subscriptions income and expenditure account, right? So total subscriptions received during the year, well, that's partially correct, sure. But let's read through all the options. Total subscriptions received less amount owing plus amount paid in advance. No, this actually is incorrect. It should be otherwise. Total subscriptions received plus amounts owing less amounts paid in advance. Yes, the correct answer to multiple choice 22 is actually option C. Again, it is testing you on matching principle where it says, the current year's income earned should be recorded in current year, and current year expenses incurred should be recorded in current year, right? So this is about income. All right, so the amount that is not received in the current year, which should have been received, would be added to the total subscription received, whereas any money paid in advance is a liability and therefore reduced from the current year and will be recorded in the subsequent years as accordingly. So let's look at multiple choice 23. The financial year of a club ends on 30th April. During the year ended 30th April 2017, the club received an interest-free loan from a member. In which of the club's financial statements will this appear? It's going to appear in the receipts and payments account and statement of financial position. So let's find that option. And there it is. The answer to multiple choice 23 is actually option C, right? So receipts and payments account, this is a receipt, therefore it will show on that. Or an equivalent of this is actually cash flow statement, right? So if it's not a club accounting, if it's a normal company, a private company, then it will be called cash flow. So that amount will also show up on cash flow because the company has received that, and statement of financial position stays the same. That's simply called balance sheet. Let's look at multiple choice 24. Multiple choice 24 is how can profit for the year be calculated? And this is a very simple basic question that by now, you should just, when you look at this, you should immediately be able to tell the answer, right? So it's not going to be A and B. You have to just see either it's plus drawings or minus drawings. Actually, it's the answer to this is actually plus drawing. So the answer to multiple choice 24 is actually 24C. So the difference between opening and closing capital and then adds drawings to it. And the answer to multiple choice 24 is 20. This is option C. So let's look at multiple choice 25. So multiple choice 25, Abdul does not keep a full set of books, but was able to provide the following information. So he gave us opening inventory, closing inventory, and purchases. Abdul applies a markup of 20% to obtain the selling price of goods. Right. So what were Abdul's sales for the year? So simply what you would do is you will calculate the COGS first, which would be 5 plus 58 minus 7. You would get X1. Apply 20% to X1. You will get X2. Then add X1 plus X2, and you will get X3. So I'm writing down the formula. I'm not doing the maths here simply because if you don't practice these numbers by yourself, you may not get the logic behind it. So you would have to do these numbers by yourself. I'm telling you the formula here. All you need to do is follow this, and then X3 would be your answer. But for the sake of telling you the correct answer, the answer to multiple choice 25 should be $67,200. So this X3 should come out as $67,200, right? So the answer to multiple choice 25 is option A. Let's look at multiple choice 26. What are the main features of debentures? There are no voting rights. There is no dividend. So the answer to this option, this multiple choice, is actually option C. Debenture receives a fixed interest and rate of return is fixed, right? So as I said, return received is called interest because this is a loan. This is a loan. You receive interest on your loan, and it's a fixed interest rate on your debenture, and there are no voting rights, right? So the correct answer to multiple choice 26 is option C. Let's look at multiple choice 27. Multiple choice 27, which items are shown in statement of changes in equity, right? So this is an equity section, right? This is an equity section. It's either going to be option B or option C because this is correct here, right? So we just need to look at which items would be shown, right? So these two items, changes in share capital and changes in reserve. So this is correct. This is correct, right? So the answer to multiple choice 27 is actually option B. Let's look at multiple choice 28, which document is used in the calculation of gross pay, right? So how would you calculate, how does the company calculate gross pay? That's using your timesheet, right? So you're using your timesheet. So the answer to multiple choice 28 is option C. Let's look at multiple choice 29. This is about accounting ratio. It's talking about how would you calculate capital or current ratio. It's CA over CL. That's 35,000 over 10,000. This is gone, and that would be 3.5:1. So the correct answer to multiple choice 29 is option C. If you remember the formula, it's a very easy question. You know, as you see, it did not took me much time to actually solve this question. Right, so let's look at multiple choice 30, which is always about accounting principles. You know, the last few questions, the last one or two multiple choice questions, 29 and 30, or multiple choice 30, is always going to be about accounting principles. So you know how important it is to understand accounting principles. Even throughout your exam as well, there were different multiple choice questions which were actually testing you on different accounting principles. For example, one of them was testing you on matching principle. Actually, two to three of your multiple choice questions were testing you on matching principle. 2 to 3 multiple choice questions were testing you on accrual principle, right? So accounting principles are very important to succeed in this exam, because it's all about accounting at the day end. So let's look at multiple choice 30. Mario has decided that all items purchased by his business should be recorded at the amount he actually paid for them. Which accounting principle is Mario applying? That's simply historical cost, right? So historical cost principle says that the business should record the amount of purchase, or the cost of purchase of an asset as same in all the upcoming years, right? So that's the historical cost principle. I hope this video was helpful to you. Please don't forget to like and subscribe to my channel for more videos like these, and feel free to share this video, share this resource with your friends, and let me know in the comments section below on what videos you would like to see more, what accounting topics bother you, so I can make more relevant videos for you in the future. And thank you very much for watching this video.